Hi everyone, can you hear me okay? Can you just tap in the chat box and just tell me if you can hear me okay, and then we'll get going. Great. What I was going to do is, I was just going to kick this off. The idea of tonight is just an informal chat about back to basics. So this is what I'm going to talk about can apply to beginners or experts. As experts, so-called experts, we never stop learning. The markets are always different every day, so we need to keep up our training just as much as intermediates, and of course beginners need to get their heads around what we're doing. Okay, so yeah, like I said, I'm just going to kick off with an intro, and then anybody who wants to contribute and ask questions or start talking, even share these screens if you want to show us some charts and how you've lined your charts up. Great. That would be fantastic. Okay, so what I was going to do is today, I shorted the Dow at the high. So I'm just going to talk about why I did that and use that as a platform to talk about the basics and what I think are the three main basics in trading. So just so that you guys know exactly where I'm coming from, and just so there's no sort of cloak and dagger stuff here, you can see that this is what I put in the Skype room today at 3:53. I said, Dow, I'm short, small scale at the moment. These highs are in daily band resistance. Scaled it up first though. I scalped up first. So I scalped the market up, saw the top and just got in underneath the top and traded it down for just over 100 pips, I think it was, and then got out because I was busy and didn't want to sit there and give a lot back, etc. Okay, so let's have a look at the markets and see why I did that, and then we can just talk about some basic trading. Okay, so this is the Dow on a 4-hour chart, and I was asked the other day by a scalp school graduate to talk about 4-hour trading because he's not at his screens very much, and he was interested in 4-hour charts, and I thought, well, yeah, I should be talking more about 4-hour charts anyway. I mean, when I'm trading during the day, the guys in our room see my bigger time frames. They see I talk about the bigger picture all the time, but obviously, during the day we're scalping. We're looking for our bite of the market, if you like. So the reason why I scalped to the downside today is because this indicator here, called a MACD, is sitting up quite high. We've come a long way. We've come a long way from 21,500, close to we're getting close to 26,000. So this is a big old move here. So it stands to reason that the opportunities for shorts, bearing in mind crazy shares, you can, even if who would the trend trade, just out of interest. What do I call shorting the Dow counter trend? No, what I think the market's doing at the moment is, I mean, the bulls and the bears are both sort of making money. So the market is pretty balanced. You get a drop and then you get a bounce. You get some selling and you get some buying, etc. So the markets are pretty balanced. We're doing some simple wave patterns on this 4-hour chart. So my view of the market is at the moment, it's not counter trend trade to short, because we are hitting major resistance points, and it stands to reason that if you short, you can get some decent moves. If you short over here, you've got some fantastic moves. Okay, so that was part of the reason why I shorted today. And then the other part of the reason is if you just look at we'll look at a 1 hour chart. You can see, just again, look at the MACD here, we're actually divergent. If we've got any, have we got any beginners in the room before I should ask? Anybody a beginner is in the room? Or less experienced, shall we say? Beginners or less experienced? Any? Are you all experts then? So you can see that as this market was making a higher high, this MACD was making a lower high. So there's a divergence. And it looks like we're all experts in the room, so I'm sure you're all aware of that. Nice pattern divergence up here. That led to quite a nice drop here, which is what we could, of course, happen here. So I'm not a big fan of indicators full stop, really, but I do have, obviously, I have MACD on my charts as a guide, just a guide to show me when these markets are potentially getting a bit exhausted. Okay, the other reason, I mean, off the technicals, the radar a bit. I mean, the other reason, one of the reasons why I thought the shorts would get something out of this is because so much of these moves happened in the Asian session and not in the US session. So I tend to find if the markets have moved up without the US behind it, the US, when the US opens, they tend to drag it down to bring it back to the levels so they can buy a cheap price. And let's face it, if your home market has run up and you weren't in it, you're not going to buy high, are you? And that's pretty much what's just happened today. So, by all means, anybody wants to chip in, by all means, just chip straight in. Anybody got problems with logging in? Are you okay? Anyway, so that's the reason why I was shorting today. And what else have I got? I can show you where I actually got in. Let me just drag this up. So this is, just so you know, this is not fairy tale stuff. This is my futures account. So for those of you who don't know, YM is the CBOT futures. I sold at 590, 25,590, and then basically trail stopped it down to achieve my 100 pips. I was looking for a gap fill, but there's too much support down there, and so yeah, that's what I wrote when I screenshot that. Yeah, looking to see if that would backfill. So I was about, I think about anything from, I've said I've 10 pips off the high. I don't think that's true. I think I was about 15, 20 pips off the high. But like I said, not looking for tops, just interested in the way these markets are at scaly heights and so on. The other aspect of this, if we go to the bigger picture, and let's come out of that a second. Whoops. The other aspect of this is if you go right up to the daily time frame. Let's not go too wild. Let's pull that over. Go back to the daily time frame and look at a couple of aspects of the way in which this market is coming up here at the moment. You've got the MACD, which is really running out of steam here. We're barely above the midline on the histogram. Huge push yesterday, but we are very close to a zone up here. Tell me what indicators you guys are interested in, because I'm just about to put another indicator up here. But let me know what indicators you are interested in. All right, I'll show you while you're hopefully typing. I'll just put one in. This one I like this one a lot. I know you can't see the yellow bands down there, This is the, I'm sure most of you, if not all of you, recognise it as the Bollinger Bands. But right at the top here, we've come right in contact with the Bollinger Bands up here. You can see we've been nudging them all over this sort of January high. And here we just about almost nudged it here, so you can see a lot of people calling highs. I was in a week-long traders, what do you call it, it's a summit last week. So I was speaking at a slot on Tuesday morning, and one of the traders who was speaking in front of me, quite rightly so, this was the beginning of last week, she was shorting, suggesting that we short because of these very reasons, because we were hitting key pivot resistance up here, and she called it for that week. Here we are back up against these highs again, but definitely running out of steam. So answering my own question earlier on, is this a counter trend trade short? Not if you're knocking your head against this kind of resistance here. Anybody who trades the S&P 500s, you'll know, I'm sure you'll be quick to tell me that we're hitting the 200-day average up there on the daily. In fact, let's go and find the S&Ps. One of the things I'm going to mention to you as well is, I even got a 200-day average on that. One thing I was going to mention, if you have got a retail account and you are wondering why you sometimes get stopped out, there's a 200-day average. So we peaked above the 200 average and we're obviously struggling. One of the reasons why people or retail traders struggle with retail accounts is because what some people don't realize is the retail accounts are out of step with the futures market, because these brokers are making their own markets. What you could be seeing up here is a key. We all know markets love big round numbers. Well, this was the big round 600 up here, but on this account it was reading, I can't remember the exact figure now, I think it was reading about 630 or 640. So quite often when retail traders are trading, so this is the futures market and this is the retail market. This account here is linked to IG index. So when I talked about earlier on about getting short and scaling in, I started to short on my IG account and then realized it was working, so then went to my futures account, which is obviously much higher leverage, and then started trailing it, and then started taking entries and trailing it down in my futures account. But that's just one thing to bear in mind, that the prices that you see in a retail account are quite often not matching, because they're not allowed to. The retail brokers are not allowed to match the exchanges because there are tight rules on that. Okay, just a hot tip there. So if you're going to manage that, if you're going to steer your way around that, your preparation needs to be right on the nail. So back to the Dow. Last week I said to my guys in the room, I think this Dow is coming up to, I think we are going to hit 25.7. I thought we were going to hit 25.7 last week, but there was way too much resistance and just not the momentum to break above these highs. Certainly caught a bid yesterday and dragged that up, but that's where we are at the moment. So I've been talking for 15 minutes. Tell me a little bit about, anybody want to talk about their methods of trading? Are you scalpers? Are you intraday traders? Or are you beginners and swing traders? while you're thinking about that or typing in, I will just go talk about some of the swing trade entries we've seen here. So we saw a swing trade entry up there in October. Bollinger Band caught it, and we had a candle pattern up there as well. We had, I've got a feeling this IG account shows weekend. That might be a Sunday open bar there. But we certainly saw weakness into the next day underneath that Bollinger Band. So we've had, since October, we've had 1, 2, 3, nice engulfing bar there. That was a Sunday bar again, wasn't it? It gapped up and then just rolled over. Sell signal there, which didn't come to much. So if we get another sell signal here the next couple of days, this could at least drag us down to some support. So yeah, I marked that as a sell signal. In fact, we almost got a sell signal here, bumped into that big huge bar, drifted back to the 50%, and then that pushed up. This is fibbed on 2018 high and low. I personally like to fib the previous year and leave it on my daily chart because I think it can really work well, and I use fibs in a different way on the other charts. So it's back to basics. Let's talk about, so we've talked about swing trade sell signals, the way in which the Bollinger Band is working here at the moment, and the theory is that a lot of experts will tell you that Bollinger Bands work well because we are so dominated by algorithms. The algorithms are, it's believed that the algorithms are programming around Bollinger Bands because of the way in which Bollinger Bands work to standard deviations. Yeah, they're formatted in quite good mathematical way that algorithms lock onto. That's why it's good these days to have Bollinger Bands on your charts, because of the way in which they're being used by the computers that you and I are trading up against. Okay, so if we do start to sell here, if we do get a sell signal and start closing under 25.5, then one thing we can do is drag all this down and then start fibbing this here. So it stands to read, if this is a top, well, we don't know that's a top yet. We're certainly still sitting up there quite nicely. If it is a top, then we could expect to see 24/7 fairly soon, and if you really get a swoon to the downside, we could come in contact with 24 quite quickly, and then it's all up for grabs as to whether these zones are going to hold or whether that's going to pull up. So basics, basics number one, moving averages. So if that's moving average, so at the moment it was resistance, now it's support. So if that moving average falls over and gets, we start seeing a price underneath that moving average, then we can expect this. I'm not a massive fan of moving averages, but I do think they are a good guide. I always see them as, talk about them as guide ropes. So we are extended. This is a 50-day average. Now, when I was taught technical analysis, one of the first things I was taught that the 50-day average is what's called the black box. We used to call it the black box level. And in the old, a long time ago, before algorithms were really kicked in and became so dominant, it was always considered that basic, simple computer programs would all send out alerts once 50-day averages were tested. That was the case here. That was we've got 50 and 200 average crossover there. So markets don't tend to get too far away from the 50-day average. So that's why you got so many people calling a top here. We are further away here from the 50-day average than we were on that initial. Here we were only that distance away from the 50-day average, because this is the 50, isn't it? Got a little extended back down to the downside, pulled back to the 50 and just breached it, and then started swinging around, and eventually once we got the crossover they just slammed it down. So back to now where we are now. It's unusual to stay that far away from the 50-day average. So that's point number 2. The other aspect of basic support and resistance is, if we strip all this away, take these lagging indicators off, get rid of these moving averages. I'm sure I'm teaching, well, not teaching, I'm talking about getting you guys to suck eggs a bit, but hey, just suck on, because it's good just to sort of stand back and look at some simple charts once in a while, I think. So here we are on the Dow, looking at this from the left hand of the screen is all back to 2017 sometime. So we've got major resistance up there. Now we've got major support down here, and we've got localized support down here. And if you eyeball that, that's pretty much fib level, isn't it? That's pretty much, I reckon if I threw the fibs on that, that would pretty much pick up the 50%, I think. Yeah, give or take a few pips. So just by eyeballing it, it's picked up the 50%. So yeah, if we are going to return to the mean, it would stand to the reason that if we do see a continuation of this selling here, that 24,250 would be seen fairly quickly. Bear in mind we come down 3 times faster than we go up. We could end up down here within a week. So starting to short once you get so far away from the basic 50-day average is no bad thing. Any observations from anybody else at this point? You're all very quiet. I'm happy to keep on talking. I just don't want to bore you guys with all my chat when some of you might want to have your own say, that's all. Otherwise I'll just keep chatting if you guys are happy for that. So if we now look at chart patterns, so we've got this. What I'm interested in, actually let's just forget that for a moment. What I'm interested in is funnel patterns. I think where a market comes out of a funnel pattern, you tend to get, it's a good place to look for entries, and also you can, once the market comes out of a pattern, out of a funnel pattern, it does tend to accelerate quite fast. You can see how that's a bit of a squeeze up there at the moment. So by simply closing underneath this, that could then create the downdraft to 24.8. Okay, we can see other examples of that. I think you probably saw me take one off here. So that precipitous fall down there was pretty much structural failure at that high. So you can see they're fairly similar there, aren't they? Where else have we had them? Oh, the obvious one is a very fantastic steep climb up there into January last year, and the well-documented failure up there at that point. Otherwise, we have some smaller scale structural failures. And so on. The thing is, I mean, some people say, "Oh, you can, trend lines aren't any use. You can draw it." And I agree. You can draw trend lines. You can sit here and draw trend lines in all sorts of different places, can't you? There are rules for trend lines, but you can angle trend lines on all sorts of parts of the chart. That's why to me, the real code of trading is fibs. A guy called I think is it Todd Gordon? Yeah, Todd Gordon said this in a presentation I listened to ages ago. And I thought, yeah, he's right. I mean, I'm using fibs to a huge extent in everything I do anyway. But to call it the code of trading, I thought was quite significant. I've always sort of thought about that, and always use fibs as the code that the markets can pick off. Let's have a look at the impact of fibs on 2018. Here was the initial downdraft. So us traders like to buy low and sell high. So you can see you got these bars here were sitting on the outer zone. So although you've got nice bottoming tails, and where do they go? They go to the inner zone, top of the inner zone. Pull back and don't quite reach. So that was a big clue that was going to drop again, because the fact the market wasn't strong enough to test that zone was quite a significant clue that market wasn't happy still after all that selling. But look at the clinical move here. When was that? This was June last year. Very, very clinical, tight move, a little overlap from that fib area, and then you drop. And again, but that shows it's bullish. Just as that market didn't touch the upper zone there, this didn't touch the lower zone here. And then what do we get? We eventually wind up to 2018 highs, a little breach over it, and down we come. Because when we sell again, what do? We come into the lower zone, peak above the zone, back to the lower zone, back to the higher zone, and then whoosh, we breach the 127 extension. And then immediately, once we breach it, immediately close back up. So I think to call fibs the code of trading is justified in my books. And those of you, some guys in the room are coming in on the program with me on Saturday. I use fibs intraday on a very different way to most traders. I've not seen fibs taught in the way that I use it, and that's one of the reasons why I picked a short today. There was the way in which I use the fibs, it was screaming a sell signal up there to me today. So I'm going to be keeping these fibs on the Dow for the foreseeable future. But like I said, in fact, I'll be keeping the 2018 fibs on 2019 price range for the rest of the year. But I will be, the different time frames I use, I will be adjusting and looking for the wave patterns within that. Now, just mentioning waves, anybody a fan of Elliott wave in the room? Okay. If you, I'm a massive fan of Elliott wave. I think I've read Mr. Elliott's book. Not a very palatable, easy read, I have to say. But I do think, I mean, you see Elliott waves in all the different time frames. You can scale it up and scale it down, which is one of the reasons why I like it. But Mr. Elliott was basically saying, if you've got a market that is winding up and then completely slams into reverse, what he's saying is, you know, this is the impulse. He's saying wave one is the impulse, when everything is nice and hunky-dory, and all the bulls keep buying the dips, and all the bulls keep making a little bit of money. Maybe some days they make a lot of money, and then suddenly it just winds down. So what he's saying is, after, you know, the fear and the, you know, extreme decent selling of wave one, it all calms down, and everything starts to climb back again. So it's wave. The idea is that you don't necessarily have to jump in on wave one. It's the end of wave two that you should be interested in. Let me just clean that up because I've made a real mess of it. So yeah, if that's wave one, what you need to try and do is determine when wave two is finished and wave three begins. Now, how can you do that? Well, if you use the code of trading, so if we, guess what, if we fib wave one, you should note that wave two was smack on the top of the zone. Now, in my book, the tighter the markets behave to the fibs, the better your trading should be, and the easier and lower risk your trading should be. So we literally turn around on that high zone and sell and come close to the support. So there's all the fibs are doing. I mean, in pure simple terms, fibs are just support and resistance. Basic support and resistance, that's all they are. Forget the fanciful numbers and all the origins of fibs. It's just support and resistance. So we gap up, immediately close underneath this fib level. So that was the first fib level attacked and failed. This is the second. So there's wave one. Wave two is complete. There's wave three. So after all the fear, etc., we get the retracement for wave four, and then wave five continues lower until you get down and breach the extension. So look where we are now. We're just failing at the 50%. Okay. Let's look at a different market. Let's look at that same thing. I love trading oil. You can see how I marked up oil already. Big funnel failure here, and you get a retest at the underside of the trend line So I will call that a kiss and tell. So it kisses it on the underside, and then you get the drop. So if we now, let's see if the fibs could have given us a clue as to where that could have gone. So if that is a key wave there, so on 13th November we hit the extension, the fib wave extension, and then continue, we breach it. So the most recent highs were just retesting the 161 failure level here. So we look, oil looks if it could spill over here. If we can't get above 56, we could and start closing under this support here at 52.50. That's toast. That could see further drops. If we put the fibs back on this range, you'll see we're already nudging. This 55.50 was already nudging a zone, and so yeah, all we're doing at the moment is, if that's wave one, it's not a very decent wave one. If that is a wave one and wave two fails, then we could at least come back to the 50 area, and possibly start dropping back down to that support again. So what I've been doing with oil is I've been day trading it. I very, very rarely swing trade oil, particularly as there's more on the futures market. It's much bigger leverage, because I've been trading mini Dow contracts. I just switch my position levels, position size in buying bigger, more or fewer lots in mini Dow, but this one is much double the leverage. So I was buying here. I was buying these dips, thinking that this might close higher, and of course it just failed to. Lots of topping tails, lower close, and then they just sold it off. So obviously I stayed out of that. Bought some of this, traded some of this. I didn't trade it today. I bid a little bit too low and didn't get filled, so I missed some of this move. But that's where we are in oil. So we are in a tough area here. I think what we're going to do is, I think we might slop around this area, and then that's my feeling, my gut feeling, that we won't. I don't think we're going to drop underneath that 50 level. For a start, it's the main dry season. The contracts for the main dry season are still kicking in. The Americans drive everywhere, so huge consumption during their summer. Okay, so that's oil. Just using fibs as basic support and resistance. Again, let's have a look at Bollinger Bands. Yeah, sorry, let me just convert that. Let's make that black. So there's a buy signal. We come out of the Bollinger Band, and immediately day after close inside the Bollinger Band. That's a decent buy signal there. So that 44.60 was good. Just took a week or two to get back up there. So we've hit the lower Bollinger Band here. We're getting a sort of tight neck there, which suggests that either the range could get tighter, or if we obviously break out of that neck, then that gives us the next range. I think we will get into a bit of a box play here. I think we could slop around there, but who knows, maybe the rest of the year, who knows. But if we close either side of that, then that's your direction. If we do close either side of it, then I would suggest you would target the high of that box or target the low of that one. So if we break, I reckon we could get up to 62. If we sell, I think we could get up to 40, get down to 43. Let's look at any. We've got any forex traders here. Let's look at the pound. Let's get onto the. Let's look at a bit of Brexit, shall we? Let's just take all this off, strip out all the indicators. There's the structural breakdown in April last year. Wow. Yeah, it's a double top drop, isn't it? So you get a nice sell signal at 17th, 18th of April. Doesn't really wave down, does it? Can't really apply Elliott theory to this because the first downdraft is so heavy. You only get minor pullbacks. You get sort of little Elliott wave moves. So you get sort of 1, 2, 3, 4, 5, 1, 2, 3, 1, 2, 3, 4, 5, 1, 2, 3. Yeah, it's not very good, is it? It gets a bit better here. That's a 1, 2, 3, 4, 5 wave there. And here we are, a 1, 2, 3, 4, 5. 1, 2, 3. We're a very neutral position at the moment, which, bear in mind, if you look at fundamentals and the way in which negotiations are going on, that's pretty much in line with the politics of the day, really, isn't it? Any forex traders? I don't touch forex much these days. No, it's great if you catch if you're in this, but the volatility is so much less than the Dow. The Dow's fun. Dow's really good fun, but forex to me is boring, really boring these days. Very hard to make a. I find it very hard to make a living. Oh, there's a nice fib set up on. Let me just tie the fibs up on pound yen. So there's the range from Feb 18 to August 18. And then you get the nice big drop on the 2nd of Jan. And we've just been struggling up here ever since. So if we fib it's not really, that drops on the 2nd of Jan, so that's cutting into 2019 time. But that's a nice 50% area at 145 thereabouts. So we sold at 145, down here at 141.50 and a bit more, and now we're just in the middle. Where do I think that's going to go? Again, I think, yeah, coming back to what I said about the Dow, I think the markets are quite well balanced at the moment. Dow is balanced to expensive. This pound is balanced to, is much more evenly balanced at the moment, I think. If you look at this last leg down here, we're sort of just a middling from the November highs and the January 2nd lows, threatening to just roll over, close underneath 141, 140, and obviously that's not great. Since I came out of Dow's hardly moved. So I'm just going to finish up looking at, put that back on 2018 highs and lows. Looking really precarious, isn't it? Very precarious. Quite often look at gold, or let's look at silver, because I like silver a lot more. You can see how I've marked up silver. I think if we can come down and test this support, test this breakout area, I think silver could do really, really well. If you look at the bigger picture, had this huge move up in silver to nearly $50. So I think this is at least going to, we're down there getting close to $15. I think we could pop up to 20 and ultimately longer term really get going. I think that's threatening to do a repeat of this pattern here. I think what we're seeing here and here could be about to repeat what we've seen here and really break up. It's an industrial metal, unlike gold, and it's getting more and more expensive to mine. A lot of mining issues around the key mining areas in Australia and Brazil and so on. So yeah, I think that could really crank up. Right. This session is really just it's just a sort of meetup. It's meant to be just a general informal meetup. With the combining with scalping as well. If you so you can see on general scalping that wow, decent push up. Now we're just wandering down. Okay, anybody? So if you are scalping, let's just switch to scalping now. Let's just hold on one moment. I just want to check something. Okay. So for scalpers, you can apply the same basics of trading. You can apply, this is the Dow. So if you've got, so we came into this with, this was the open. So if we mark off the open, that's the opening bar. We had support and resistance here. So the opening bar saw that shoot up. So all we've done at the moment is, as far as scalping is concerned, just drifted back to the downside. Just drifted back into the middle of the support and resistance, the intraday support and resistance. If you are there's today's open range, and so we did pull back and then do another little run, and there's the gap down there. So we've not quite done a gap fill, and here we are struggling with the low of the range. So yeah, I think there was it was difficult to jump into this one. Well, I say difficult. I mean, it looked as if it could punch higher very, very soon after the open. But if you didn't get in that, and so quite often it's good to sort of sit out from that sort of, when you get to that situation where it just runs like that, and just wait for the pullback. So at least you can get. I mean, that pullback was worth 540 to. That was nearly about 70-80 pips up there on the pullback. So if you didn't get the initial push, then you could have waited. You could have got a move into the 3 o'clock, 3:15 reversal period. That's fairly typical for a reversal. And then, of course, I shorted, having traded at the upside, I shorted to the downside. And there we are, just still in this support and resistance zone. So look at, if you're a forex trader, oh, big spike up there. That's inflation, wasn't it? I think inflation was out today, wasn't it? So where's the London open range is 8 o'clock. So there's the London range. So we broke to the upside and then broke to the downside. We saw a lot of selling into the Central European Open anyway. Breach it, screaming to the highs at through one bar at 12 o'clock, and then we come right back to the beginning. So that's a good. That is a classic data trade, actually. I was taught a long time ago by a forex trader, a veteran forex trader. If you wait until 15 minutes after the data and basically just trade it where it came back to, if it's screamed off in one direction, wait till 15 minutes is gone and then trade it back to where it came from. That doesn't always work, but that's trading. You do the same thing every day and expect, assuming it works, you do something that works every day and then keep repeating it. And had you held on, that would ultimately got you from, so there's your entry at 129.50 area. You would have safely got back to 128.78, and if you're still in it, you'd still be making money. Right. So we've got Scalper School program on Saturday. Really looking forward to it. It's a great time to be scalping. I wasn't in a trade that long today. I did trade it to the upside and the downside. So good money today. Not a massive move, but so you've got 20 minutes of selling. Oh, it's a 15-minute. I'm talking about, it's a 15-minute chart, isn't it? So from the initial short at 3:45, it was pretty much all over by. Pretty much over in 45 minutes. And here we are just trying to push back. So you guys in the room who are coming to Scalper School, we have got a fun day set up on Saturday. So look, and you'll learn all about why I like that top so much and what I'm going to do that on a typical, now we've got this sort of action, what I'd be looking for in the coming days as we head towards the end of the week and get into the rest of February. It's options expiry on Friday. You're familiar with options expiry? Options expiry is where you have billions of dollars of options that get that complete on Friday. They're all focused, that's stock options and options on other areas. And on 4 Fridays of the year, you get triple witching, is when all the stock, commodity, forex and bond options all combine, and that gets really interesting on what's called triple witching. But this is just the typical 3rd Friday of the month is always options expiry, and you tend to get the markets gravitating towards key numbers. So at the moment we've got 25,000 underneath us that we've seen today, and we're just currently sitting around 25.5. So it's going to be interesting what the market may or may not do as we get towards option expiry for this month. All right. Right, I'm hungry, so I'm going to get off and get some dinner. Any questions? Any questions at all? Okay. So thanks for joining me. Thanks a lot for coming along, and I will do a sort of midweek look at the markets next week as well. Keep it a regular slot. We'll probably talk about scalping more next week. So today the theme was basics, but next week we'll stick to scalping and just talk about pure scalping. Right, no questions coming in, so I'm going to run off and get some dinner. Thank you very much for joining us, and those of you who booked into Scalper School, really look forward to. You don't know normally I don't open the room to get everybody talking when I run Scalper School, but yeah, they're pretty. You get Asda or Sainsbury's or whatever. You probably buy one for £2-3, I think. Even the cheap ones are not bad. I recommend you get one. It'd be nice to get everybody talking in the room and voicing questions rather than tapping in all the time. Thanks for joining me, guys. I'll sign off now, and I'll catch up with you on Saturday for those of you who are hooked into Scalper School. Looking forward to it. It's going to be fantastic, great fun. Thanks. See you then. Bye.